Welcome back. Welcome back to the 41st episode of Coffee with Krav, where I have conversations with different people from different walks of life, where I look to educate, entertain, and have some fun. Back in 1982, there was a song by The Clash that epitomizes today's episode, and that song is Should I Stay or Should I Go? And there's one line in the song that I love, which says, uh, if I stay, there could be trouble. And if I go, there could be double. Well, we will find out about that today. Uh, People are moving from high tax states, New York, California, and so on, to non tax states like Florida. I'm asked all the time, what are the advantages? What are the disadvantages to do that? What are the processes that we have to go through? If I'm a New Yorker, will New York come after me? How do I prepare for a possible audit? We'll get to these questions and many more. We're very fortunate to have not only one but two experts, both of them from the Clash. We got Joe Strummer and Mick Jones. No, just kidding. We have Ken Lindenbaum, CPA tax expert from New York, and we have David Pratt, an excellent estate attorney from Florida. So I'm going to read their bios and then we'll get started. Ken Lindenbaum. Ken is a tax partner with Eisner Amper with over 30 years of broad experience in federal and state taxation and a concentration in individual, partnership, LLC, and S corporation taxes. Ken's area of expertise also include real estate, entertainment management, as well as foreign businesses and individuals doing business in the United States. David Pratt. David is the chair of the Private Client Service Department of Proskauer and managing partner of the firm's Boca Raton office. His practice is dedicated exclusively to the areas of trust and estates, gift and generation skipping transfer, fiduciary and individual income taxation, and fiduciary litigation. He was recognized by Chambers as the only star individual in Florida for private wealth law category. He is serving as a chair of the Florida Bar Tax Section and chair of the Fiduciary Income Tax Committee of the American Bar Association's Section of Taxation. He's a fellow in the American College of Trust and Estate Counsel and is an adjunct professor at the University of Miami Schools. Gentlemen, welcome. Welcome to Coffee with Krav. We're going to have some fun here. What I want to do is I think it's important to start with a definition. People always get confused with residence versus domicile. And you guys will correct me if I'm wrong here, but domicile is the principal establishment to which one intends to return to whenever absent. Residence is a place of abode. You can have many residents, but only one domicile. So we'll be concentrating on changing your domicile to Florida. We'll talk mostly about changing from New York to Florida, but we also have people on here that's in other states. So we'll take a look at that as well. So just kind of to start off, let's just take kind of a brief look at what the tax advantages. Why would someone even want to move to Florida? What are the tax advantages? So David, if you can just give a kind of a brief, and we'll get into more details a little bit later, but just kind of a overall brief details about why someone would want to, from the estate planning standpoint, why someone would want to move from New York to Florida.
Sure. Thank you, Mark. And I love the reference to the Clash as well. Actually, our guidelines that are available, the title is Should I Stay or Go to Florida? So we're thinking along the same lines. So anyway, thank you and good to see you, Ken, as well. Let me comment first on what you said about domicile. And it really is a great question. And I'll just mention what domicile is, and I'll pitch it back to Ken. Well, when we go back to him, and he can talk more about quote unquote statutory residency. But domicile is a concept, Mark, that we learn in law school, and it's pervasive throughout the law. It's actually one of the first concepts that we learn because it is all over the place. But it is particularly important in what we're talking about today. And the definition of domicile is essentially the physical presence somewhere, plus the intent to remain somewhere indefinitely. And as we'll learn today, I mean, physical presence is easy. That's easy to measure. But what this domicile and change of domicile is all about is intent and how we look at the intent. So I'm glad you raised the definition. And again, we'll talk about the quote resident definition a little later. So, my answer is really easy, and Ken's answer is a little bit more complicated because my answer with respect to Florida is we don't have an income tax. That's simple. We don't have an estate tax. It's that simple. That's the end of my conversation. There's nothing more to talk about. And when obviously I'm oversimplifying.
David, thank you very much. You've
nice
been
to
great.
see you.
You'll see.
Should I stay or should I go? Exactly, Mark. So I mean, but for all kidding aside, people, a lot of people do, move to Florida for tax purposes. For another day, I don't think it should be the driving reason. Many people stay because, as what I like to call is the tax on happiness, because it is not that easy to necessarily change your domicile. But, we don't have an income tax and we don't have an estate tax. And people ask every so often, well, what if they change the law? It would take a constitutional change to impose an income tax in the state of Florida. It's not happening. We once did have an estate tax, but it was matched to a credit that was given in the Internal Revenue Code against the federal estate tax. So for all intents and purposes, we never have had a true estate tax. Now, my friend Ken will tell you otherwise, and he'll tell you all about New York's income taxes and the estate taxes. Ken, you want to just say, kind of what the top rates are there?
Yeah, sure. I mean, New York State income tax could go as high as 10 or 11%. And if you are in New York City, you can add, another 4% to that. And then, as you mentioned, New York State does have an estate tax as well, which is fairly high. So
Yeah.
People are concerned about both.
And if you want, obviously I'm the estate tax guy here from an estate. And I'm, by the way, you can probably tell by listening to me that I am also a former New Yorker, even though I made the move many years ago, but my practice is in both jurisdictions. The New York estate tax is actually 16%, but you get a deduction against the federal estate tax. And since the federal estate tax rate is 40%, that effectively translates into a 9.56 effective rate for New York purposes. So we like to say that if you're a New York resident, the estate tax rate is 50%. Plus their exemption is about half of what the federal exemption is. So, real money is at stake, both during life from an income tax perspective and at death from an estate tax perspective.
So I read through the non-resident audit guidebook. It was very, very exciting, let me tell you. But it was put out by the State of New York Department of Taxation and Finance, and they have 5 primary factors that determine domicile. The first primary factor in changing the domicile, obviously, is having a home in Florida. So, I get this question: is it okay if I have a home in Florida? I mean, a home in New York? If I buy in Florida, do I have to sell my New York home? So what's the thoughts? What's the thoughts there?
Mark, I wish the answer was that simple, but I'm glad that you alluded to the New York State residency audit guidelines, which you're right, they are a true sleeper. So if you are having trouble sleeping, I reckon it's definitely on the top 5 list. So I'm not telling anything new out here, but you can't just answer, should I sell my home? You can't answer this in a vacuum. And the reason for that is exactly what you said. That is that there are 5 guidelines, the 5 factors. And what those guidelines tell us is that the New York State auditors are instructed to look first at 5 primary factors. And what they're told in these guidelines is essentially to say, okay, let's look at these factors. And if by clear and convincing evidence, we point to either New York or, in this case, Florida, then the analysis is over, whether you're New York or Florida. But if it's too close to call, then there are 7 secondary or other factors, which we'll get to in a moment. But most important are the 5 factors. And what the auditors are told are to look at all the factors collectively. That's why it's not as simple as just saying, oh, sell your house. I have people who still have their homes, no issues, but I also have people who, have a business. What are the 5 factors? And then let's go through them together.
So
and then
so let's stay with the home. And these are some of the questions that I get from people. And Ken, maybe you can opine on this. The size of the residence, does the size of the residence matter, or does the value of the residence matter? And does one matter more than others? So you can have maybe like a small apartment in New York, but it's worth $10 million, or you have this palatial home on Long Island, but it might be worth less. So is it the value? Is it the size? Is it both? What matters? What matters more?
Well, they really look at both. They look at size and value of your New York home versus the size and value of your Florida home. And again, no one item by itself is going to make or break a change in domicile audit. They look at numerous factors. This would be one of those factors.
And would the nature of the home matter? In other words, let's say I have a summer home in New York and I'm in Florida most of the other time. So the nature of it is that I have a summer home in New York. So would something like that matter?
Yeah, so again, they look at primary factors, and that would be, one of the factors, and having your principal home in Florida versus a summer vacation home in New York is certainly a factor that would help you substantially.
Okay, so
let's stick with the home, Mark. The other,
yeah,
the other 2 points I want to make is number one, holidays. Where do you spend the holidays, right? And very often, the people, your typical quote unquote snowbird, generally says, oh, I'll come after, at least the Jewish snowbird, I should say. The Jewish snowbird will come after Rosh Hashanah and typically, leave, somewhere before Passover. Probably better if you're trying to prove that you're becoming a Florida domiciliary is to spend the holidays at your home, your principal home, right? So I encourage my clients to spend holidays in Florida. If they're going to have a big birthday bash, have it in Florida at their Florida home. Principal means principal, and that's where you do the really important things, like have your family over. So it's really, really important. The second point is they also like to see a change, right? So, when you go from year to year, if you're going from, from New York to Florida and you're buying a new home, they're going to look and compare. Okay, you had you may still have your home in New York, but now you're upsizing in Florida, right? Or maybe you're downsizing in New York.
well, Dave, you bring up a very good point, which is one of the other primary factors, which is family and family connection. So you mentioned the holidays, where you're spending the holidays, but I, I guess my question is, let's say I have a son that lives in Manhattan, and but I'm trying to become a Florida domicile in Florida. Would that work against me, the fact that my son is living in New York State?
Yeah, I mean, it's the 5th factor is location of family members. And this has been somewhat controversial over the years. For a while, the auditors weren't supposed to really look at it, but they do look at it because you can't really move your family. But one of the primary factors is location of your family members. And we're talking about your closest family members, whether it's children, it could be a spouse. I have a client who wants to become a Florida domiciliary, but his wife does not want to become a Florida domiciliary. That's not a good factor for this guy. But location of family members is the fifth factor.
So
Yeah, and
with
I would
that,
say also, I want to add something to that. When they
Yeah.
talk about family members, when they talk about adult children, they're really not as concerned because you can't decide for your children where they're going to live. I think they're really looking at more for your non-adult children. They get a little, they get a little bit more concerned that it makes the audit that much harder when they're non-adult, when they're minors, and they're living in New York and going to school in New York.
and on the
That's a
flip
big
side,
difference.
if I was trying to be domiciled in Florida and I have a parent or some cousins or a sister that lived in Florida, would that work to my benefit for something like that?
I think marginally, I think they're more looking for a location of family members in New York.
Okay, so they're not looking, oh, I moved to Florida because, I have all my family there. But that doesn't help.
Well, it's certainly, not a bad fact, but I think what their question is, do you have any family members in New York?
Okay. All right. Well, let's get to the second primary factor, which is an active business involvement. I'm guessing the degree of active involvement in New York compared to the business located outside of New York would be an essential element. So a question that a friend of mine had is, if you're in New York part of the year, doing business, let's say in New York for, let's say, 3 months, and you're outside of New York for the rest of the year, do you pay New York taxes on a quarter of your income? Ken,
Let's
I
pitch
guess.
that to Ken. That's
Yeah.
a true allocation. That's not necessarily a domicile question. That's an allocation of income.
Allocation.
Yeah, that's right. That's an allocation question, and you would be taxed on the portion of the income that is New York State source. So, irrespective of your residency, I've heard people say, "Oh, I'm a Florida resident. I don't have to pay or file tax returns in New York anymore." Well, that may or may not be true because of an example just like this. You could have New York State sourced income that would need to be reported.
And what if they, again, these are a lot of questions that my business owner clients are asking. What if they have a business, they have an office in Florida, they have an office in New York, but they're kind of supervising both? How would that affect things, if they're trying to domicile in Florida?
Different question. I mean, now I think we're getting away from Ken's issue of allocation and into what's known as, the active involvement in the New York business factor, which is the second factor of the 5 factors that are listed. And it doesn't really matter if you're sitting in Florida necessarily. If you're actively involved in a New York business, then that's going to work against you. I'll give you an example. I remember having a client who was a jeweler, and he moved to Florida, bought a place here, and he had a jewelry store on Long Island. And 2 of his sons ran the business, and he used to brag and say, "Oh, my sons are running the business, and I'm down here." I said, "Oh, really?" I said, so how's the business doing?" He knew every single day how the business was doing. Why? Because he was on the phone all day. He got a fax at the end of the days from faxes. He got a fax at the end of the day showing every single sale, and he had a call with his sons he was actively involved in that New York business. if you want to really separate, you can't be actively involved in that New York business. I have another client who has a company, had a company on Long Island. Well, he still has a company. He's really not involved. And I remember, he was going through the domicile change, and I called him when he was in New York over the summer. He used to go in every day, and I used to call, and they go through the extensions for so and so. Hit extension so and so, and I called him. I hit it. I said, "What are you doing?" I said, "Why do you have an extension?" And I said, "You don't have an office there still, do you?" He says, "Of course I do." I said, "Yeah, when the New York State auditor shows up and sees you in your office, what are you going to tell him? That you were there just for convenience? You've got to separate yourself from being actively involved in that New York business."
And so kind of similar question, an independent insurance person had asked me to ask you guys. He has two homes, Florida and New York. What he said was his most important client. He's got clients around the country, but he spends more time, and we'll talk about the time next, but he spends more time in Florida than he does in New York. But he's got a lot of New York clients as well. But he said his most important clients, so his top 10 clients or whatever, 9 out of 10 are in Florida, but he's got a lot of clients in New York. So he was questioning what would in an audit, what would New York say? So Ken, maybe you can opine on that.
Well, again, that doesn't necessarily affect domicile or residency. It affects allocation. So you could be domiciled in Florida. You could sell your home and move completely 100% of the time and be in Florida, and be domiciled in Florida. And it might be hard to question that when you've completely left New York, except you have this business there that maybe you're working remotely from your Florida home or Florida office, and you have other people in New York, but it's still a New York-based business, and it comes back to allocation. So
does he have to go back and see what business he did with his New York clients versus non-New York clients?
yeah,
And he has to justify that?
Yeah, pretty much. New York State has sourcing rules, and sometimes it's based on where the work is performed. Sometimes it's based on where the customer is. So you have to look at the type of business, whether it's a service or you're selling a product. And then you have to look at the sourcing rules. So while New York may come in and say, all right, we might agree with the change in domicile, there is an allocation element here that you still owe New York State tax on.
So does that happen with basketball players and baseball players? Because they're going into different states, do they have to pay?
Absolutely. Yeah, they pay tax in every one of those states.
And what about a guy like Bruce Springsteen? He's going and doing concerts at different, so he's got to pay.
He does as well. Absolutely.
Okay.
So let's go back, Mark. Just I want to just for your friend, the insurance guy, because I've seen this a few times for guys. When we talk about it from a domicile perspective and an active involvement in a New York business, I would also look at his activities in each state. So, for example, a lot of insurance professionals, they do seminars, right? So if I was this guy, I probably would be on the seminar circuit down in Palm Beach, Boca, in Miami, as opposed to the Hamptons and the city, right? Especially during that year that he wants to change his domicile, right? You want to the benefit to the taxpayer, Mark, is that the taxpayer gets the opportunity to tell the story. And essentially, you have a few years to tell the story. And what we want to do as professionals is to write that story beforehand so that if the auditor comes knocking, we have the story to tell. Very hard to go back and recreate. But what we like to do is be prospective. And for a guy like that who wants to become a Florida domiciliary, I would say stop chasing business in New York and start chasing the business down here and show it, be able to prove it. And so that we can invite the the order to one of your seminars in Florida and say, this is the fourth year in a row that we're doing this.
Yeah, that makes a lot of sense. Well, we have a real estate question, then we'll get to the next primary factor, which is time. And the question is, if you have a management company in Florida, but you have an underlying business that's managing LLCs that owns real estate interest in New York, is that an allocation thing as well? Or does that hurt domicile?
Yeah, and that's you.
It's an allocation as well. It doesn't hurt domicile. If you're physically in Florida and you're a Florida resident, and you don't even own a place in New York, it's hard to say you're resident in New York, but it doesn't mean you don't have New York state source income, which New York can always argue and go after you for.
Okay, thank you. And so now we'll talk about a big primary factor, and that's time. I know, Ken, you have a lot to say about this, and I'm sure you guys have heard this all the time. Oh, you just got to stay 6 months in a day, right? It's just 6 months in a day, and you're fine. Ken, what do you think about that?
Well, it only works for the statutory residency test, and people do get confused. So domicile is one thing, and a statutory resident is another thing. So New York State can get you as a statutory resident if you're not domiciled in the state, but you maintain a permanent place of abode, and that can mean own or rent, and you spend 183 days or more in the state. So you could legitimately be a Floridian with an apartment, maybe even a small rental apartment in New York City. And if you spend too many days here, you could still be considered a New York State and City resident. But again, that is a year-by-year based test. And the one thing you got to be very cautious about is a part day is a day. So if you fly into New York and you land at 11:55 at night, you just spent the day in the state.
So good. I'm glad you brought that up. Kind of technical question, but let's say I'm in New York and I fly for a vacation to California for 2 weeks. Does the day that I fly out and the day that I come back count towards New York, and the other days count outside of New York?
So let me expand on the question,
Sure.
Mark, and I'm glad, this is why I pitched back the definition of residency to Ken. And I just want to just say exactly, what the definition is. It's just like Ken said, it's maintaining an abode in New York, and that's an and spending 183 days in New York. And like we said, a New York minute is a New York day. There are only 2 exceptions to that day count rule. Again, this has nothing to do with domicile. This is just the statutory residency test. And by the way, that it is year by year. It's only an income tax test, has nothing to do with estate tax. Estate tax is purely domicile. And so the 2 exceptions to the rule, and it's really important that people abide by this, are number 1 is traveling through New York. So for example, if you were living in Florida and you flew up in the morning to Kennedy Airport and spent the afternoon in the Crown Room or wherever at JFK, and then caught a 6 o'clock or a 9 o'clock flight to Europe, that's not going to count as a New York day. Similarly, if you were driving, from New Jersey to Connecticut and you had to go through New York, that's not going to count as a New York day. On the other hand, using those 2 examples, if you flew up to New York in the morning and you went into the city for the day and had lunch, brunch, caught a matinee, and then went, that night to Kennedy, that's going to be a New York day. Same thing if you, drove through, Westchester County, played around a golf, and then went to Connecticut. That's going to count as a New York day. So that's exception number one. And exception number two is if you get stuck in New York for a medical reason, that's not going to count.
So
That
when you
doesn't
say
mean
wait, stuck doesn't mean that, oh my God, I want to go. I don't want Florida doctors. I want to go to New York and I want to get this procedure. If I go to New York, get a procedure, I'm in there for a period of time. That counts.
that counts. Exactly. By
Okay.
the way, we have very good doctors in Florida now.
I know, very,
That's a
very
thing
good.
of the past. But if you, yeah, if you fly up to New York, you want to go up to, HSS, so we have HSS down here too, by the way, or Sloan Kettering or something, that's going to be a New York date. On the other hand, if you're walking down Fifth Avenue and you trip and you break your ankle and you get stuck in the hospital for 4 days because you can't move, those days are not going to count.
Okay, that makes sense. So another question, just again on the time part of it. Let's just say I'm trying to domicile, not statutory residence, but I'm trying to domicile in Florida. And I spend, let's say, 4.5 months in New York, another month and a half traveling, and a little over 6 months in Florida. But I'm claiming that Florida is my domicile. Would something like that be okay and stick? What would the auditors in New York feel about that?
Yeah, I mean, it's not a one size fits all, Mark. What the auditors are looking for is a monumental change in the year of the change of domicile. In other words, if in year one you spent, 100 and, 90 days in New York, and then the next year you spent 180 days in New York just to miss the statutory residency test, that's not going to cut it. On the other hand, what they want to see is a more than an insignificant change in the number of days. And again, it's not a one size fits all. I always like to tell the clients, try to stay out of New York as many days as you can. It's certain there's no rule that says you have to be in Florida half a year. The more days, I mean, I've got clients at residences all over the place. They're not spending half a year in Florida, but when the optics of spending more days in Florida than any other place goes a long way.
So there was a specific question that one of my colleagues, clients had asked her to ask me to ask you guys. Um, and that is they're Florida residents and wife is retired, the husband's still working. I believe his job is still in Florida. They have a place in New York and Florida. She wants to know is does she have to spend the allotted time, because the husband does spend the allotted time, but she wants to know if she has to spend the allotted time in Florida since she's not working.
Well, you got Ken. Why don't you answer it? Because I mean, I think you got a statutory residency issue. You got a question of whether they're
Yeah,
filing together.
yeah, exactly. It becomes more important when somebody's trying to change their domicile from New York to Florida. But if you have somebody who's domiciled in Florida, clearly domiciled in Florida, been domiciled in Florida for a long time, then it becomes just a statutory residency test, and that's that pure 183-day count.
And who's monitoring that? So for example, if I'm a Florida resident in that case, and my wife, she spends 182 days or 180 days, like who's monitoring that? It's only if you get audited,
Yeah,
will it come up?
it's only if you get audited. And again, New York is extremely aggressive in auditing the change of domicile from New York to another state. They don't want to lose that tax revenue, and they want to make sure, especially, they want to make sure that you actually did change your domicile. If you sold a house in New York and you completely moved someplace else, well, that's a pretty easy, clear, and convincing fact pattern to show the state. But, high net worth people don't always do that. They say, I've been in New York for the last 40 years. My adult children and my grandchildren are in New York. Florida's kind of hot in the summer. I don't mind, I'd like to come back once in a while. And New York wants to make sure that you actually did change your domicile. So again, it's only upon audit that they would know. But if you're a high income person, the odds of getting that audit are pretty high. And the one thing I do want to point out is that the burden of proof is on you. It's not
Yep.
on them. Because I hear all the time from clients, well, how will they know where I was? And, you're going to have to prove it. They're going to want to see your bank statements. Where are you taking money out of ATMs? Where are you depositing money? They're going to look at your credit cards. Where are you going to restaurants? Where are you buying goods? Things like that. Travel. Where are you traveling to and from? And, I've heard people say, well, I'll leave my credit card at home. I'll just bring a lot of cash. Again, if you have blank days, the burden of proof is on you. You have to prove those days. And the other thing they do is get your cell phone records, and they can see where your cell phone is pinging. So they have a good sense of where you are that way as well.
Yeah, in this day and age, Mark, it's virtually impossible. I mean, there were people that thought they could, beat the system. We always said, don't even bother, don't try. But in this day and age, with a cell phone, you could pretty much track where somebody is every single day. So, if you really, and as Ken correctly said, the burden is on the taxpayer to prove that they were out of New York, not on the New York State Department of Taxation and Finance to prove that you were in New York.
Speaking of the phone, should someone get an app are there apps out there that they have that'll, kind of monitor where they are, or just the fact that you have a phone that should be enough?
Well, the phone speaks for itself as far as records, but there are apps out there, you can Google it, that help somebody, track their time. If you can just Google it, whenever somebody wants, that's what I do. I look at it and then I see what the hottest app of the day is.
Okay. All
Yeah,
right. Well,
and apps are very helpful as well. The phone records, you don't have those records. So, again, that would only be after the fact to help you uh, prove, or unfortunately help them prove where you are. But the apps can tell you how many days you were in New York on a current basis. So if you want to monitor the days and make sure you don't go over, if you don't keep a great diary, the app would be a great source of information for you.
okay. Well, the fourth primary factor is items that are near and dear to you: family heirlooms, art, collectibles, jewelry. I'm just wondering, like in an audit, how do they know what you have or where it is, or do they actually go to your house to see that you have your Rembrandt or whatever you have there? How does something like that work?
Yeah, you go.
Oh, I was
Yeah,
gonna say
Ken.
part of it is, they want to see your bill that you had it moved. So if you had a valuable artwork, you had valuable furniture, they want to see the bill from the moving company that they actually moved it. They also look at insurance policies. So if you have this valuable artwork, a valuable piece of jewelry, where is it insured? So it's very important that if you're moving from New York to Florida, you're taking these items with you. Make sure you tell your insurer that these items are moved, and so that it's all documented that way. Safe deposit box. Why would you have a safe deposit box in New York but not Florida if you really moved? So you want to make sure things like that are done as well.
I actually take it a step further. The way I describe this test, it's called the sentimental items test. I call it the near and dear items test. I call it the teddy bear test. Where do you keep your teddy bears? I actually suggest to my clients to videotape the move so showing that they're either loading up the car or loading up a truck with the sentimental items, inventory it, and then when it gets to Florida, show it on the walls. Quick story I have was I got a client who was changing his domicile. And this guy, one of his very expensive hobbies was racehorses. And he fortunately had a number of winners up at in Saratoga and won the Derby one year. And, he has like a boatload of trophies. And, he sold his house on Long Island, but he still had an office there. And I said to him, I said, where, I know you're a big, horse guy. Where do you keep all those trophies? He says, oh, they're my treasures. I keep them in my office in New York. I said, why aren't they in your house in Florida? He said, because they're in my office in New York. I said, they got to move down. Those are your most, if I asked you, are those your most treasured, those trophies, your most treasured items? He says, you bet. Guess where they are now? They're in Boca.
Nice. Yeah, smart. Now, just to reverse things or move things over, and David, this is for you, back to the estate planning part. If I did my estate planning work, it's beautiful, it's great. I did it in New York, but now I'm moving to Florida. I'm domiciling in Florida. Can I just use whatever I did in New York, or do I need to start my estate planning again?
That's a great question, Mark. You really are asking two questions. The first question is, are the documents valid in Florida?
Right.
The ones that you did in New York? And the answer is yeah. I mean, if they were valid in New York, they're going to be valid in here. But, that's not the issue that we're talking about today, validity. What we're talking about is domicile. And what I mentioned earlier was that if based on the 5 factors, it's too close to call, then the auditors are required to look at the secondary factors. And one of the 7 secondary factors are the recitations in your legal documents. So, Mark, your will probably says, I, Mark Kravitz, a resident of I think you have a home in Suffolk County, if I remember correctly, a resident of Suffolk County, state of New York. That's the first thing that your will says. Well, if you want to become a Florida resident, you're going to do a new will down here with an accompanying revocable trust, and it's going to say, I, Mark Kravitz, a resident of Boca Raton, Palm Beach County, state of Florida. So recitations in your legal documents are very, very important because they are one of the secondary factors if it's too close to call. Not to mention the fact that our trust code, the Florida trust code, is way superior to New York's estate powers and trust law, and I am a New York lawyer as well. But from a domicile perspective, you bet. You want to get your Florida documents done in Florida because that's consistent. Again, we're telling a story. Person comes to see me and says, my friend Ken in New York, he said, I got to go see a Florida lawyer. What do I do? I says, look, you got to do Florida documents, healthcare surrogate designation, living will, durable powers of attorney, a pour over will, and a revocable trust.
Okay. And speaking of those secondary ones, are you talking about like voter's registration, driver's license? So I have my list here of things that people would need to do, but I'd love you guys to either opine or let me know what I'm missing. So you want to change your voter's registration, your driver's license, your
And
vehicle.
actually vote, by the way, Mark. It's not enough to, it goes a long way. If you come down here in November, I'm not going to tell you who to vote for because that's a different program, but you got to come down and vote.
Okay. All right. Driver's license, vehicle registration, get doctors, medical doctors here, change your health insurance, safety deposit box. I think that was talked about. Move your medical records to Florida. And Ken, this is for you. Does it matter where the taxpayer's individual tax return is prepared? Does that matter?
So I just want to take one step back with your list of items. So one of the most important things, which you didn't even mention, is file for homestead. Right. So that of all of those items that you should do, that's probably the first thing you should do to show intent to change your domicile to Florida. So that would be super important. So as far as your tax return, so where it's prepared, so if you've been using an accountant in New York forever, they don't necessarily expect you to change your accountant. But what would be important is to change your home address on your tax return itself.
Okay, that makes sense. And
So
usually,
Mark,
yeah, go ahead.
I'm actually, doctors and stuff like that is not critical. I mean, even though the more you do, the merrier. But there are 8 other factors that a taxpayer should consider that are listed in the residency audit guidelines. I'm reading from them now. The address. You don't have to move your broker. You don't have to move your bank, right? People,
Right.
a lot of brokers down here, stockbrokers, financial advisors say, "Oh, you gotta get rid of your New York advisors." No, no, no,
How
no, no.
dare them?
But you do have to change your address and on the statement. So address at which bank statements, bills, financial data, and correspondence concerning other family businesses received. Number 1. 2. Physical location of the safe deposit boxes used for family records and valuables. 3. Location of auto, boat, and airplane registrations, as well as the individual's personal driver's or operator's license. 4. Where the taxpayer is registered to vote and an analysis of the exercise of said privilege. 5. I've never even seen this one, but apparently it's important to New York. I wasn't fortunate enough to have one when I lived there, but a Manhattan parking tax exemption. So that's number 5. 6, an analysis of telephone services at each residence, including the nature of the listing, the type of service features, and the activity at the location. I'm not really sure why this is important anymore because not a lot of our clients don't even have home phones anymore. 7, citations in legal documents that a particular location is to be considered the place of domicile. That's what I mentioned before. And 8, interestingly, especially these days, green cards indicating that an immigrant can legally reside in the United States on a permanent basis.
Okay. Well, we got an extensive list, and when someone's trying to do this, trying to domicile in Florida, how long does that typically take? Any idea?
Well, it's not. You actually draw a line in the sand. You pick a date. In fact, Florida has something called the Declaration of Domicile, which is something that that we always have our clients do when they're becoming a Florida domiciliary, and they're saying, I, David Pratt, hereby declare that I'm a Florida domiciliary. I resided in New York until this date. I became a Florida domiciliary on this date. And you draw a line in the sand. And when they go back to Ken to prepare the income tax return for that year, and Ken can elaborate on this, he's going to prepare a part year income tax return, a New York income tax return as a resident, and a part year as a non-resident. So it's not necessarily a period of time. We do draw a line in the sand. The period of time element comes in after the fact and that's when the New York is going to come take a look at everything. And that generally is going to take a couple of years because what happens is the taxpayer files a non-resident return, and then, at some point, New York, either manually or by some computer program, figures out that this person is no longer paying taxes as a New York resident, and then they determine whether they're going to send an audit letter.
And a lot of times also, David is right. It's a day, right? You moved on. It's not a period. You moved on a day. And a lot of times in these residency audits, they asked what happened on that day. How did you pick that day? Well, it's usually, well, that's the day the movers came, took everything out of my home. I hopped on a plane that evening for Florida with the intent of not returning as a resident. That's that's how I picked that particular day. And and the filing for homestead and the declaration of domicile very important, but and getting your driver's license and registering to vote, that could take a couple of weeks before you get around to it. So you don't have to wait until those later dates You know, you do have to do it, but it's, you know, you generally pick, you know, a line in the sand, a specific date, say, this is what happened, this is why this date.
Would it,
And something that people are neglectful of, Mark, is, you know, Ken and I can tell clients all day what to do down here, but you basically have to do the opposite in New York. You got to give up the stuff in New York. You got to give up your New York license. You got to give up the registrations. You got to give up whatever exemptions you have in New York because you're a New York resident.
and would it hurt the person if they already had a house in Florida? So they have a house in New York, they have a house in Florida. Maybe the house is worth more than it is in New York because they're preparing to do that. But it might be years later where they say, you know what, pandemic hit, I'm not really working as much, or I'm not working in New York as much, I can work in Florida. And then they decide to just pick the end of the year to domicile. Would that hurt them, Ken, in an
Well,
audit?
it's actually a great question because this is actually very common, or at least amongst my clients anyway, and what it's that I've handled. So it is common, and it comes down to picking the actual date. So so I've owned a home in Florida for the last 8 years, and today I decided I'm a Florida resident and not a New York resident. Well, it's going to come up in an audit. Why today? What happened today that made today the day that you became a Florida resident? And you need to have some good answers, you know, for that. I retired today. Something had to have happened that you picked today.
Couldn't just be an
And
epiphany.
here's how the practical answer, what they need to do. If they already have a house here and they decide on a day, you know, go back to the primary go back to the primary factors. Say, all right, well, you know, if they already have the house, right, you got to look at, they want to see change, because remember, domicile is defined as the physical presence plus the intent to remain somewhere indefinitely, right? When you moved to Florida, when you were a snowflake and had that house, you didn't intend to remain there indefinitely, right? You were still a New York domiciliary. So what did you do around that date? They got to focus on the other factors, right? Remember I said before, it's not a one size fits all. That year, you got to really diminish the number of days you're spending in New York. If you were a New York domiciliary before, spending 7 months in New York, 5 months in Florida, you better flip that and even more, right? Move the sentimental items, right? If you were actively involved in a New York business, like Ken said, you got to retire. You already have the houses, so that's not going to be as important. They're not going to flip. That's not going to measure intent so much. You got to look at the other factors and show a change.
Yeah, that makes a tremendous amount of sense. Well, this has been fantastic, and we got so much information, and I know that people viewing and will be viewing this will get a tremendous amount of information. Anything before we end here? Anything else that anything that we missed? Did we covered it? We covered a lot of bases. We covered primary factors, secondary factors. Anything that we missed? Anything else that you want to end off with?
Yeah, I want to say one thing, and that is a common, two common mistakes. Number one is there are a lot of professionals, that will just say, "Oh, here's a checklist, and this is all you need to do." You've already learned that the checklist of what you do in Florida is important, but it's not the end-all result. You do need to do everything. It's the kind of thing that if you don't do it, you will get punished, but you don't get rewarded for doing it. You really got to follow those factors. And the second thing is, forget about what your friend at the golf club is telling you. Oh, I did this and I got away with it. Everybody's got a different story. There's not one size fits all. And you got to go see somebody who knows this stuff, does it day in, day out, like a Ken Lindenbaum, like myself. There's plenty of those other people out there that understand the New York residency audit guidelines.
Ken?
Yeah, and the one thing the few things I would add is that, just remember the burden of proof is on the taxpayer. It's not on the state. And the state is going to come in, a year, 2 years later, they're going to have hindsight. So that helps them a bit as well. So make sure if you're changing domicile, you're really changing domicile and you can prove it.
Excellent.
Let me add one thing, Mark, now
Yeah.
that I thought about these audits, and I'm sure Ken will chuckle a little bit and I heard him talk about the auditors. New York is going to be vicious about it. And ultimately, very often, they will settle, but they're going to settle at an amount that it's going to be painful, but you're going to get the result you want. And I call that the extortion fee. And they basically extort you, right? And they say, all right, you want to spend the next year or two? Ken and David, they seem like really nice guys, but do you really want to spend that much time with them and pay them a boatload of money? Just write a check to us now and we can be done.
Which will end with going back to the clashes line, which is, if I stay, there could be trouble, but if I go, there could be double, and that could be double your taxes. So that's excellent. You guys did just a absolutely fantastic job. Really, really appreciate everything that you said. And for anybody that would like to get in contact with Ken or David or myself, just email us at align, ALINE, at align, ALINE, wealth.com. And do you have any further questions, we can hand it over to Ken, hand it over to David, and we'll be sure to answer that. So once again, thank you very much for joining us with Coffee with Crav. We will have another episode coming up very, very shortly. So thank you and have a great day. Bye.
Thank you.
Thank you.